Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, May 12th, 5:24 p.m. Eastern Time, coming to you from the financial capital of the South, St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video, the Green Edition. Market state, we are in an uptrend since the O'Neill follow-through days on 422, 423. Check the trend gauge over here. One more green arrow today. We've had green arrows on market leaders since 425. Same with our short-term trend since 425 today. Medium-term trend, 50-day moving average goes to green, and a green sub-arrow on 200-day moving average as all of the large cap indexes broke above their 200-day moving average today. We need to see multiple closes above there. Ideally, we want to close the week above there. Mid caps close to the 200-day, small caps have quite a way to go. So, what caused all this greenery? Well, over the weekend, China trade reset is the way it's being termed. We cut the tariffs from like 145% to 30%. Uh, Constructive talks confirmed by both the CCP and the Trump administration was good enough for a strong gap at the open last night. Got stronger as the night went along. Very green gap open, a little bit of a fade in the morning. Bulls came roaring in to suck up those shares that were being sold, and we closed at the highs of the day. Here are the numbers, our 21 over 21 list, 3 new additions this week. We'll take a look at that full list at the end of the video. 16 up, 5 down, up an average of 2.96%. The big eight rocking and rolling up an average of 4.76%, only Netflix lower from that group. The RG8 up an average of 3.7%. S&P 500, 3% gap up, 3.26% close. RSP, 2.7% higher. NASDAQ 100, 3.8% gap up, 4.1% close. Good strength on equal weight, not quite as strong. We'll look at the Dow and the strength in mid caps and small caps. When we look at the charts, Global 60/40 up 1.3%. Foreign stocks lagged US stocks today, and bond prices pulled back a bit. Our flagship GROTECTION portfolio up an average of 2 point, not an average, approximately. It always depends on how assimilated you are, but the standard portfolio up 2.07%, TurboTection up 1.93%. Let's get into these really nice charts, and you can see we have been talking last week about this 7-day consolidation. Consolidations should resolve in the direction of the primary trend, which was most decidedly up with the strength off of the bottom. There's your gap up. There's your highs at the close of the day. There's your clear of this black line, the 200-day moving average. Let's reset it. And what do we want now? Well, some backing and filling wouldn't be a surprise. But as I said to the team when we were discussing this over the weekend, it's much greater to have a gap up after a 7-day consolidation than it is after saying 4 or 5 days straight up. So wouldn't surprise me if we went higher after this consolidation, but some backing and filling would be perfectly normal. The key now, we need to hold the 200-day moving average on pullbacks, and the 50-day moving average is actually curled up. If you look at a weekly chart, you can see here, that's the red line, a 10-week moving average is curled up. And we closed above the 10, 20, 30, and 40-week moving averages for the S&P 500 on the weekly chart. Back to the daily chart, only 2 points lower on the S&P today, so that is very quickly flattening out. Will turn up, and we also got the 21-day moving average crossing above the 50-day today. Let's go to this bottom to bull checklist that we've been discussing for a couple of weeks. Started with First was a regain of the 8-day moving average in the O'Neill follow-through day. We saw those on 422, 423, and one by one we checked off, regaining the 21 day, no distribution days, 8 EMA crossing the 21, regain the 50 simple moving average, 21 cross up the 50, that happened today, regain the 200-day moving average, that happened today. 50 SMA slope turns positive. I guess you could put a check mark there if we were going by the 10 week. But we're a day or two away from this 50-day moving average turning higher. Only step left after that would be the 50-day crossing up through the 200-day moving average. That's going to take a couple of weeks, providing we don't pull back hard. But there we are, 8 of the 10 steps checked off, going from bottom to bull. We just take our cues from the market and monitor leading stocks. And when the wind is at our back, we get our money into the market. When it's in our face, we lighten up or get the heck out of the way. As we've detailed on videos every night here, talked about how we lightened up, got out, uh, and got back in. And stick with us here at Revere. We've got a plan for every scenario that the market could throw at us. So there's the S&P 500. Let's go to the NASDAQ 100. Looks a whole lot like the S&P. 7-day consolidation, clearing of the 50-day moving average. And if you look closely, let me confirm this. 50-day moving average 471.27, 471.26. No, a penny shy of turning higher, but essentially the 50-day moving average is flat now on the Nasdaq 100. Let's go to the equal weight S&P. It also made its way above the 200-day moving average, and the final big cap index, the Dow, also clearing the 200-day moving average, regaining that 42,000 level. Up 2.8% on the day. Mid caps up 3.5%. Big clearing of this congestion that it's been in, still a few percent below the 200-day moving average. And finally, Russell small caps still with a way to go, 4.1% below the 200-day moving average, but also a gap higher and holding the gap as well. Those are the major indexes. Let's go next to the VIX. Some good news here as well. Gap down on the VIX, closed near the lows and breaking back below this 20 level. 19.5 is the long-term average for VIX, and it's below that now with an 18 handle. It was down 15% today, I believe. US dollar with the trade deal did show some strength. That didn't stop stocks from acting well, though. Into the declining 50-day moving average is the dollar now, but clearing this 4 week consolidation, which included a false breakdown. Another level of resistance here, the 102 to about the 103.50 level. Some resistance there before we get into the declining 200-day moving average and another band of resistance around the 104 level. That's the dollar. Dollar up strongly. Yeah, precious metals getting hit. Down 2.82% was gold. So it made a lower high, not quite a lower low yet, but breaking back below the 21-day moving average. Gold stocks hammered, down 7.4%, breaking the 21-day moving average, still holding on to the 50, but they made a lower highs and also have made a lower low now. Bitcoin, outside negative reversal for Bitcoin, down 1.3%, but after two straight gaps higher, not a surprise. As long as it's above the 8-day moving average, we kind of say you've got no room to complain if any asset is above the 8-day moving average. In fact, this just broke out earlier than the S&P and the Nasdaq 100 did from their consolidation. So you can see the relative strength there, not today, but it certainly has been there over the past 3-4 weeks. Bitcoin. On to bonds now. Broad bond index gapping down. TLT, the long bond, also gapping down. That means rates slightly higher. There's the TYX, the 10-year, or that's the 30-year, and the TNX, the 10-year, also gapping up. It's our inter-asset correlation. Let's go to the tail of the tape. Stochastic's positive, but now hitting overbought on the S&P and also the RG8. Same thing with the NASI RSI. Dollar and rates still in range. Percent of stocks above the 5 day on the high end at 79, but until we get above 80, we don't normally get concerned. Sometimes it stops right around that 80 level. But after the big move up, not a surprise that it's as high as it is. There's the news with the China reset. Uh, Key inflation number tomorrow comes before the open, that being CPI. Keys coming into today, S&P and the Nasdaq against their 50 and 200 day, clearing the 200 day, also cleared the 100 day and the 150 day as well. That took our day count from a 7 day consolidation to 1 day higher, 14 days above the 8 day exponential moving average, 13 days above the 21 day. And our expectations remain positive as long as we stay above the 21 day on the NASDAQ and the S&P 500. S&P ATR broke back below a 2. That's very clearly a positive and is dropping. Sector strong today, 10 out of the 11 spider sectors, although staples and real estate, two defensive sectors, barely higher. Semiconductors and banks led the way to the downside, utilities, and as I mentioned, gold and gold stocks. Portfolio changes, GROTECTION just did an offensive trim on HIMS as it hit 4 ATR, extended from the 21-day moving average. That's a very common tactic that we use to trim into strength when we hit 4 ATR extended from the 21. Volatility adjusted beta for GROTECTION 0.92. Balance at risk 4.78. That means if all of our stops got hit tomorrow, the portfolio would be down 4.78%. Turbo Holdings sold Spotify as it had a weak open, did bounce a bit later in the day. Also some offensive trimming. Tesla, as it hit some resistance. Hood extended and HIMS extended. Also added to Uber, bringing adjusted beta to 0.71, 4.62%. Balance at risk. So the bottom line on the day, gap up and close at the high of the day on China trade, and the large cap indexes cleared their 200-day moving average. Keys for tomorrow, I want to make sure the S&P and the Nasdaq stay above that 200-day on any pullbacks. Let's get to the 21 over 21 list now, and we'll start off with the holdings that we have. Anything in here that is with a green arrow, so this will be about the first 9 or 10 that we review. So Netflix, bucking the trend of a strong market today. So this is a situation where money flowed into this while the market was uncertain. Market decided to take, because it was kind of not an issue with tariffs on Netflix. Well, or so we thought until Trump floated the idea of tariffs on movies made out of the United States. But anyway, down 2.65%, slightly above average volume, still above the 21-day moving average. Normal pullback, but a bit surprising as it was a leader going into today and didn't participate. Palantir, fairly tight range, up a percent, really underperforming versus what the index is doing. But after its gap down on earnings, last week, found great support at the 21 and showing strength since then, now putting in a handle in this cup and handle base. PE Vernova up over 4% on the day, bouncing off the 8-day moving average. Uber started slow today, just rallied all throughout today. Some very nice strength there, barely clearing, but above this 143-day long flat base on almost double average volume. Very strong performance by Uber. Had kind of a shakeout on its earnings last week. Sometimes that shakeout gets rid of everybody that wanted to sell and gets the stock into the hands of stronger buyers. And more buyers want it after that. They've got to bid it up, and that's what we saw today. Great move by Uber. CRS closing the bottom third of the range, but also strong, up 2% on the day. Hood closed mid-range, up 5% on the day. Tesla up 6.75%, following up on the strength from its move above this 200-day moving average resistance on Friday, gapping up and closing near the top of the range. HIMS, I mentioned some offensive selling that we did on this. Click track price here, and you can see it has about a 10 to 11% ATR, and it's 38%. It's 38% above its 21-day moving average. So when it hit, we got out around 57-ish when it was 4 ATR above. They trimmed it in turbo, and we also trimmed it in grow. Bros, very nice gap up 10% on the day. Great action after its earnings shakeout. And finally, IBIT, the last one of the 21 over 21 that we own. We already took a look at this. Outside negative reversal on Bitcoin, but had been showing strength. Not a concern at this point. So the rest of the 21, these next 11 here, Spotify, gap down, undercut but reclaim the 21-day moving average. Another situation where something that's considered not an issue with tariffs met some sellers today as money was positioned into more risk-on assets. Guidewire continues to act well, bouncing at the 8-day moving average. Zscaler gap up 3.61%. Carvana started slow but closed at the top of the range, up 4.3%. Maple Bear, aka Cart, great reaction to earnings, down last week when the CEO announced it was leaving. He was leaving, she was leaving, I think she. But bounced at the 21 2-day consolidation here. You can see I've got an alert above the highs of today as a possible position to take. Chewy, they announced the CFO left. It gapped down. It closed at the high of the range. Still barely down on the day. That was a buying opportunity off the 21. Duolingo continues to just show fantastic strength since its earnings report. Boeing coming into the 200 level, also continuing to show strength. Now the three new ones, Toast making a higher high, day two higher high and higher high close after its gap up on earnings, above average volume as well. Really good to see that. Broadcom gapping up 6%, best looking semiconductor chart out there. And TMDX gapped up on its earnings last week and a strong day today after closing near the bottom of the range last week, but up 20% on its earnings day, up another 6% today. And that's the final in the 21 over 21 list. And it was not easy to squeeze those three in. We had at least 15 candidates vying for the coveted last three slots. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. If you're interested in becoming a client, reach out to my partner, Dan Stewart. That's Dan@revereasset.com. Our flagship portfolio, GROTECTION, and our more aggressive version, Turbo, can get into thinner stocks, buys more crypto. More aggressive means should see stronger gains over the long term, stronger pullbacks to the downside too, since it's more aggressive, but still with GROTECTION sell rules as we don't let anything get out of control here. But all our portfolios are designed to grow assets during uptrends, protect them during downtrends. Most transparent advisor in the world. Who else details every portfolio change that they make every night on video and gives their market returns and market outlook. This is why millions of dollars are flowing into Revere, and we're very proud of the product that we can put out there. And with that, I will wrap it for Monday, May 12th. This is Don Vandenbord with Revere Asset Management. Telling it like it is. It's not how much you make in the market, it's how much you can keep. We preserved it. Now we're growing it. Thanks for listening and have a great day.